Hey guys, how you doing? This is Jabril for the SPX Ninja. Today I'd like to go over the US stock market, especially with the recent volatility. People are wondering what's going to happen next. So let's get right into it. Here I have the weekly chart to get a big picture view of what's going on. And as you can see, we had a major bottom in 2009. Since then, a bull market has started. And as you can see, we've gotten waves 1, 2, 3, 4, and then we are progressing in wave 5. So now let's drill into the daily chart. And here we can see that wave 4 had ended in the beginning of January 2016. A lot of you guys might remember there was a lot of nervousness around that time as well. Since then, the market has started a new bull market, and we are progressing in this fifth wave of the bull market from 2009, and this fifth wave itself is in 5 waves. So let's see what we got here. Wave 1 started in 2016 and ended in the summer of 2016, and then we pulled back towards the election time in wave 2, and since then we've had this very powerful wave 3 rally, and wave 3s are known to be the most powerful waves in a bull market. What I've also done is I've drawn a channel basically connecting the top of wave 1 with the recent top in early 2017, and made a clone of it and put that from the bottom of wave 2. So this gives us an idea of where the price should be moving. Towards the end of wave 3, I guess sort of like a blow-off rally for wave 3, it did go through the top of the channel, and that was the end of wave 3. Now some people are thinking that this might be the end of the bull market completely and we are headed towards a longer term bear market. I'm not of that camp, because when you look at the RSI on the daily, when wave 3 prices were at their peak, RSI is also at its peak. Ideally, we'd like to see the prices making newer and newer highs while RSI is making lower highs. So then we have what's called a bearish divergence. Right now there is no divergence at all, so I do not expect this to be any major top. So now let's drill a little closer into the 4-hour chart to look at how this correction is shaping out. Usually wave 3s that are extended have a pullback of about 23 to 38% of their entire move, and 38% of this wave 3's move would be around 25.50. The market fell to 25.30 in the first week of the pullback, so it actually did satisfy that correction requirement in terms of price. However, it just happened very quickly over a week, and then again in the next week. And for a long term, months of rallying, I would expect the market to correct a little while longer. So I wasn't fully convinced that that was the end of the correction. I was under the impression, and I guess you can say under the assumption, that there will be a more complex correction. Also, I believe it's going to be a complex correction because wave 2 was somewhat of a simple correction, and Elliott wave has a law of alternation, or a guideline of alternation, that if wave 2 is simple, then wave 4 will be complex. So coming back into wave 4, wave 4 is a correction, and corrective waves are usually subdivided into 3s. So we have basically 1, 2, 3 is my thought, and each of these waves are also subdivided into 3 themselves. So we have A, B, C, which completes the first leg of the correction, then A, B, C, second leg of the correction up, and then A, B, C, the third leg of the correction, which is what we're kind of progressing into right now. And I have broken down the C leg here even further to try to get an idea of where we might end. My first target would be 2530 because that is the panic low of the first week. So a test of that is likely. But also on the way up, there was a pretty important level, 2480, which was resistance for a while, but then we eventually broke over and never came back below it. That can be tested as well, and that's coming in at 2480. And if you recall, the channel that I made is also coming in around 2480 now. So I would guess, I would work under the assumption that 2480 will be tested. So here is, I don't want to get too much into the nitty gritty of the breakdown of this wave coming down, but basically a few more ups and downs in the days to come, maybe a week or so, and we should get to 2480-ish level. And that is what I'm expecting to be the end of the correction before the market continues in the fifth wave of the fifth wave that I highlighted earlier. At this point, I'm targeting 3200 as my wave 5 end. It could go longer, but we'll worry about that when we get there. Right now, I am just looking through and just basically coming up with what could be the breakdown as it goes towards the 2480 level. Well, that's what I have for today. Thank you for listening, and there will be many more of these sessions. Thank you.